Well, welcome everybody. Thanks for joining us today at this April edition of our policy research talks. As many of you know, these talks give us an opportunity to present our work coming out of the World Bank's research department with the goal of sharing the findings with colleagues inside and outside the department, as well as outside of the World Bank. So a warm welcome to everybody in person and online through the WebEx or the live stream. Today's topic is revenue mobilization is especially critical for low and middle income countries, where tax systems often operate under significant constraints, such as informality, low tax capacity, political hurdles, and limited data analytics, which frequently lead to ad hoc policy adjustments rather than comprehensive reform. However, as we'll hear today, advances in data analytics are opening new possibilities for evidence-based, real-time policy making. To guide us through these new developments, we're joined by Dario Tortarolo, an economist from the macroeconomics and growth team here at the Development Research Group. His research focuses on public economics in developing countries and seeks to understand how public policies affect workers, businesses, and consumers. Also, the distributional impacts and the unintended effects due to design issues related to tax policy, and how governments can address tax avoidance and evasion, especially at the top of the income distribution. And with April 15th coming soon. Prior to joining the bank, he was an assistant professor at the University of Nottingham and a postdoctoral fellow at the Institute for Fiscal Studies. He holds a PhD in economics from UC Berkeley and a BSc and MSc in economics from Universidad Nacional de La Plata. He received the National Tax Association's Outstanding Doctoral Dissertation Prize in 2020. I'm also delighted to welcome our discussant today, Gabriela Incaust. She's a practice manager in the global unit of the Poverty and Equity Global Department at the World Bank. Previously, she served in various positions as lead poverty economist in the West and Central Africa region of the World Bank, Latin America and Caribbean, and Eastern Europe and Central Asian regions. She has led technical work and policy dialogue on the distributional impact of fiscal policies, ex-ante analysis of the distributional impacts of climate change and climate action, and on methods and tools to decompose changes in poverty and inequality. She has led regional analysis on poverty and inequality in Africa, global analysis on fiscal policy in developing countries, and the barriers to women's labor force participation and agency. So the rules of the game today, Dario will present for approximately 45 minutes, after which we'll hear from Gabriela for about 10 minutes or so. Then we'll open the floor to Q&A from the audience. If you have a question, please use the raise hand option on the WebEx. And if you're in the room, obviously raise your hand and go to the mic. Just a reminder, the session is being recorded, so please ensure that your microphones are muted when you're not speaking. With that, over to you, Dario.
Thank you, Dion. How do I change to the...
Alt-tab, yeah.
It's still not showing here. So I guess, is this, we have to do it in WebEx? Because I see here end slideshow. Probably, yeah. There it goes. Yeah.
Okay. Full screen.
Okay. Let's begin. Thank you, those joining online and those who made it in person despite the weather. So now I realize by looking at the cover of the slide that it could be the cover of a TED Talk or even like a Quentin Tarantino movie, but don't get your hopes up. It's still about taxes. So let me start by highlighting two quotes. The first one says that taxes are a necessary evil, but and the fewer we have of them, the better. What I want to argue here is that taxes, from an efficiency perspective, are fundamentally bad because they often discourage something and make the pie smaller. So if you're familiar with the supply and demand chart diagram on the left, there is a tax here, and we see that quantities are decreasing. But countries need tax revenue to achieve development goals, so this is the green area. And in the process, they typically create losers and winners, so the incidence of a tax or who is benefited and affected is shared by consumers and producers or whoever is affected by them. Selecting the tax mix and levels is usually at the forefront of policies agendas. And here we have a figure that I like a lot, where we see at the top of the figure the tax levels relative to the GDP. And the figure is splitting this into different income levels, so high income, upper middle, lower middle, and low income countries. And also by the type of tax, so direct taxes on income or profits, and indirect taxes on mostly consumption. And then we have all other sources of revenue. So what's really striking in this figure is that, if you focus on the bars in the middle for each country group, we can see that they are very similar. So in terms of indirect taxes are quite similar across the spectrum. And we see big differences in direct taxes, such as those on wages and income and so on. So this is really where high income economies make a difference. But typically, as you can see, they do it in different ways and colors. And what we see here is that there are some vanilla principles, what I put at the top of the slide: neutrality, equity, and simplicity. And we see that these are useful guides, but in practice, what we often see is that setting up efficient and equitable tax systems is tough. It's a tall order. And here's the second quote that I want to highlight, which says that in developing countries, tax policy is often the art of the possible rather than the pursuit of the optimal. And I want to highlight 4 main barriers. The first one is informal economy, so typically employment and informal consumption, and there is a good policy talk by Pierre on this topic. The second one is weak capacity and high compliance cost for taxpayers. There is a very good talk by our colleague Oyobola. There are also political roadblocks, typically captured by elites in a society, and also resistance from lower income people. And then the fourth factor, which is the one I'm going to focus most in this talk, is limited data analytics, typically because tax or governments don't have time or don't have the capacity to do it, or they see no value in this. But we are lagging behind, and this is one of the points that I want to make in the talk. Taken together, these 4 barriers could rationalize why we have inefficient tax and inequitable tax structures that perpetuate in time. And these are typically characterized by third-best taxes that typically are production inefficient, and also marginal ad hoc reforms or changes rather than more holistic reforms, comprehensive reforms. So let me give you a timely example of what I mean by third-best tax. So third-best taxes are typically taxes that are much easier to collect. So like in developing countries, you create revenue quite fast, but at the cost of production inefficiencies. And this is a key question to keep in mind when we think about these taxes. Do revenue efficiency gains offset production efficiency losses for that tax, but also comparing to other tools? So the tax that I want to focus on for this example is the tax on mobile money. So mobile money adoption and usage has increased substantially in the last, I would say, 5 or 10 years, 5 years especially. But so has the tax on mobile money transactions, especially in African countries. So this possesses a complex dilemma. So here we have 4 factors, 2 in favor, 2 against. The first one is that this tax helps mobilize fair amount of revenue. So you can see in this figure that I'm borrowing from a paper from the ICTD group. and also some from the ZIMRA, the Zimbabwe Tax Administration. Especially in Zimbabwe, right? You can see that in 2024, it was like 5% of all the revenue they collect. The second positive aspect is that with this tax, countries typically can reach the informal sector. So if there are some informal businesses that are making some transactions with their phones, then they are going to pay a tax. And then the negative aspects are that, of course, as you know, they discourage mobile money usage, and some people argue that they could be regressive. We still don't know the answer to this, so we need more evidence. So let me illustrate this from 4 countries. I'm going to borrow some figures from a report from the ICTD, and I'm going to show you some evidence for Ghana, Uganda, Tanzania, and Zimbabwe. Starting with Ghana, in this figure we can see the blue bars are the total number of transactions done with their mobile phones. And then the orange line is the value of those transactions. And then the yellow bar here shows the introduction of the tax. So what we can see very quickly, this is more macro facts. We can see that despite the introduction of the tax, we see that the number of transactions keep increasing, and we also see that the orange line is increasing as well. When we go to Uganda, we see the same pattern, right? The transactions keep going up, the green line keeps going up. And similarly, if we look at Tanzania, so everything seems to be going up. But there is a visible economic drag in this figure. And as you can see, if we project a line through the yellow time series over here, you can see that there is like a missing mass that we can calculate. This is connected to the first figure that I showed you today, the supply and demand, when there is, we are losing some welfare when we introduce a tax. The story in Zimbabwe is a little bit different. Zimbabwe introduced this tax in October 2018, and you can see that just in 2 months, 3 months, they collected a significant amount of revenue, but then in 2019, they collected 10% of total revenue from this tax. So this is, it's a very important source for these countries. And this is a revenue that can be used for development goals, to fix roads and social protection and so on. As a benchmark, because now it's popular these days, you can see that even it's collecting more revenue than other taxes such as custom duties. Now, what's the issue? The key question is what's happening with money usage, and in particular also incidence. So when we look at macro evolution of the volume of transactions done with mobile phones, so you can see that in Zimbabwe in particular, there was a big increase when there was a cash crisis at the beginning of the 2018. When they introduce the tax, we see that it decreases a little bit, but then it keeps increasing. And the things get really bad. So there is like a 60% decrease when there were some more macro restrictions at force. So these are restrictions, some bans on mobile money transactions. So here's where you see that this is really affecting the economy. So the point of this graph is that it could be more than taxes, and we need more research to disentangle the effect of these taxes relative to other confounding factors. So what are some early reflections that I want to make out of this is the tax can help mobilize valuable revenue, and it can help tax the informal sector. There are visible welfare losses. It doesn't seem to be breaking the economy. It's an open question. And the third point is that the design varies a lot across countries. So it goes, for example, flat 0.5% in Uganda to 22 bands in Tanzania, where there is like an increased fee that they have to pay depending on the value of the transaction. And then the second point I want to make is that eyeballing trends, like from this figure, eyeballing trends over here, it's informative, but it's not enough. So we need more forensic microanalysis to set a precedent, and in particular to estimate 2 unknowns. The first one is the size of the distortion, and also the marginal value of public funds. Marginal value of public funds is essentially the welfare loss for each additional dollar collected in revenue. And the second one is the incidence. Who is being affected by this tax and by any tax? So more generally, the point that I want to make in this talk is that countries have reached a tax and data crossroads. And it's key to recognize that these 4 barriers that I mentioned at the beginning of the talk are not laws of nature, and these are choices. So for example, whether to give a tax relief via exemptions or reduce rates on capital income or a particular sector, and the decision to invest in tax capacity, collecting information, communications to get, kind of alleviate the political economy of reforms, and investing in data analytics, seeing the value of data analytics for policy choices, for policy decisions. It's key to recognize that there is a tax credibility revolution, and the key is that there is a landscape where we have like electronic government, e-wallets, electronic filing, electronic invoices, artificial intelligence, high-frequency data, global coordination, and so on. Believe me, countries are getting so much data, so much information that they don't know what to do with it. So it's sitting, in many cases, it's sitting in their tax administration, and there is value in this. What can they do with this? They can improve the use of second-best taxes, such as value-added tax, personal income tax. And they can better understand third-best tools, like it's happening in Africa with mobile money. We need to understand what is the size of the elasticity of that. So for this, I have 2 points here. The first one is we can use data for ex-ante design, so we can understand the anatomy of a tax that is currently in place. And the second point is an ex-post analysis where we actually evaluate past reforms and ongoing policies. And we help governments construct counterfactuals of policies or counterfactual scenario. What would happen if we do this or that? So the outline of the talk, I try to be comprehensive. I know where to skip if I run out of time, but I want to talk about national taxes and subnational taxes, in particular, the value-added tax, then the personal income tax, and lastly, subnational taxes, because I feel it's a very important topic that has received much less attention. Okay, so let me start with the most important source of revenue in low and middle income countries. This tax has suffered from efficiency and equity shortcomings, but it's still preferable to other taxes. And the point that I want to make here is that this is a tax that can be improved. It's a tool. What caught my attention to get into this topic and write papers and so on is that this tool is often used to affect the economy. And here I put P and Q, so prices and quantities or activities. But this is it's a costly way to pursue equity or stimulate the economy, and often has unintended consequences. And the key, again, I'm going to repeat this many times today, but the impact is usually not measured, and the incidence is not well understood. And this is especially problematic, or there is less evidence in low-income countries and low and middle-income countries. So I'm going to provide some lessons for Argentina and Mexico. This is in blue because it's connected to prices, so I tried to play with this. And then for Peru, I'm going to show you some evidence on VAT cut that was meant to stimulate a particular sector. So let me begin with that. This is why should we care about VAT cuts and prices? Because many countries are cutting the grocery tax rates on food on a scale not seen before, with the ultimate goal of helping the most vulnerable cope with the soaring cost of living. So essentially, they cut the VAT with the hope that prices would decrease, and this would increase purchasing power of people in difficult times. So here you have a list, non-exhaustive list from a paper I'm working on, where we have on the left countries that have abolished the VAT or sales tax on food. Then in the middle, some countries that have done partial VAT cuts, and then some countries that were considering at some point. This is mostly for after 2020. So I'm highlighting in yellow 2 countries, Bangladesh and Argentina. I'm going to focus on this. Why did I choose these 2 countries? Well, first of all, because Bangladesh has provided unconditional support to Argentina in the last World Cup. So I think it's fair to give a space to this. But second, so I was in Bangladesh in February for a week, and I was struck by the number of VAT cuts that they have implemented since 2023. In particular, there was, when I was there, it was a training on tax expenditures, and there was this VAT cut that I implemented at the end of 24 on cooking oils. And the idea was to ease prices and ensure that there was enough supply. This tax expired recently. There was big pressures to extend it to June 2025, and this is a very common thing. You know, there is a temporary thing, and then people try to make it permanent. But there is no analysis of this tax, and what I want to argue is that it's possible to do it. The second example is Argentina. Why Argentina? Because I have a paper on this. It's a best paper ever. And Argentina cut the VAT, the value-added tax, so tax on consumption, from 21% to 0%. So pretty dramatic, large change on basic foodstuff. It was in place for 4 months and a half. And the goal was to increase the purchasing power of people in difficult times. So this is a photo of a supermarket in Argentina. You can see that there is a banner saying IVA, that's VAT in Spanish. And you can see that they are saying that there are over 1,900 products with 0% VAT. And then they list the different categories. So in a recent paper, we analyzed the effectiveness of these VAT cuts to lower prices and reach the target population. What do? The products that you see in these supermarkets, we have data from these places. So for every product in the supermarket, every product has a barcode attached to it, and it's unique. And you can track that barcode over time. So we have all this data for all the supermarkets in Argentina where we observe the price and the number of units that they sold, weekly or monthly. What do with this data? We split all the products that you see here on the shelves into those that were affected by the VAT cut and those that were not. So for example, tea, milk, eggs, and pasta were subject to 0% VAT, but not coffee, cereal, and crackers. So we split these goods into these groups, and then we track their prices and consumption over time. What do we find? We find that, what do we do with this? So we compare prices of these two groups over time. What do we find is, in this figure, we can see time on the horizontal axis and then the price change on the vertical axis. And here what you can see is that before the reform, which is the first vertical line, you see that prices were evolving similarly between these two groups. So that's why it oscillates around 0. And then the VAT quickly lowered prices in these chain supermarkets. So these chain supermarkets are like the most formal and biggest ones, like Walmart. Right? So, you know, within 1 week, you see that there is almost full pass-through. So it's a large drop in prices. It's relatively stable over time. But it's not full pass-through. So full pass-through would be if it reaches the blue line. When the VAT cut ended, prices shot up even higher than the pre-reform level. So this is one of the risks of temporary tax changes. And there is an asymmetry that has been documented in other papers. So this means that prices were, if the policy had not taken place, probably prices would be lower. But the twist of the paper is that, novelty of the paper is that the government, perhaps preempting that there could be an asymmetry, they imposed some caps on how much prices could increase, but they did this for some of the treated goods. So for example, let's take rice. Within rice, you typically have basmati, brown rice, organic rice, and so on. So there were caps on like the fanciest rices, like organic rice, but not brown rice, the most standard one, or white rice. When we look at those that had a cap, we actually see that prices increase less, so it was binding, but they overdid it, right? So they reached a lower level relative to the pre-reform one. Now, a key question is, this is chain supermarkets. What happens in more independent grocery stores, which many people shop in those places? In independent grocery stores, so now I'm going to move from this figure with weekly data to monthly data, and I'm going to split this price effect into chain supermarkets like Walmart and independent grocery stores. we see the red line, independent grocery stores, we see that prices fell less after the VAT cut. So we see that there is a pass-through, it's like a drop of 6%, it's like 35% pass-through rate. So prices fell less after the VAT cut, and they overshot more after the VAT was reinstated. So a key question for welfare analysis is, where do people shop? Because you see that in independent stores, it's much more limited, then prices are increasing more, and the caps are really binding in Walmart type of supermarkets. Well, it turns out that low-income people are substantially more likely to shop in these places, independent grocery stores. So this means that they benefited less from the VAT cut, and they were negatively affected by the VAT increase. Okay, so this is what, in the paper, we have a model where we estimate numerically the consequences or the welfare effect of this reform. One digression that I want to make is the data that we are using. So this is the underlying, what do I mean by scanner data? This is a screenshot from our data. It's hard to see, but let me tell you what we have here. In this column, the one people online cannot see when I'm pointing, but there is a column here where we have a unique barcode. This is the same internationally, so you can track the same goods. So this is Coca-Cola. And then we have the months of the year, and then we see in which store there is like a fake ID, doesn't mean anything, but there is a code attached to that store, right? So this is the type of data that we are using. We can geo-reference this data. This is for a city in Argentina. So this is the type of data that we are using in this paper. So preempting a question that many of you might have, is this data only available in high or upper middle income countries? The answer is no. This is not just in those countries, but it's actually prevalent in many countries. We have an ongoing agenda with Global Tax Program, funded by the Global Tax Program, thank you, and the IFS and CEFIP, where we have market data for over 20 countries. And with this data, so you see the countries here on the chart on the right. The one we have money to purchase are those in black. So it's like a fee that you pay and you have a license to use it. But then you can see that there are many countries at different levels of development. So it's a very interesting source of data where you can track prices and consumption over time. What are we doing with this? We are analyzing, for example, the tax on feminine hygiene products. These are reforms that are taking place in many countries. And also price and consumption habits. Something that I want to emphasize, let me see, is why do we care about, why do we need this type of data? Because we want to know what the answer to this question is. How are these reforms, VAT cut, are they effective or are they reaching the goal that they aim to? And this is just preliminary evidence from Mexico. In Mexico, this is using public data that can be downloaded online actually. But in Mexico, they abolished the VAT on women's sanitary products in 2022. We checked very quickly what happened with prices. It turns out that prices are dropping by only 50% of the VAT cut, right? So it's like 50% is being pocketed by the supply chain, supermarket manufacturers. So it's very important to kind of try to have a sense of like global evidence on this. There is some global evidence, not global, but five developed economies, and they find that pass-through is full in those countries. So we just have one example here, but it seems that at least in Mexico is half of it. And then the last point that I want to make about scanner data is there are many of these market companies that provide this type of data, and every country has one. And they have this, you go to a supermarket, you see when they scan, that goes to a database. The way I got access to this data was an anecdote on LinkedIn. So I contacted someone there that I knew worked at a company that have this data. And then I set up a meeting, and then they gave me a quote, and then I purchased the data. So it requires some entrepreneurship, but these data are available in many countries. It's expensive for researchers. It's not expensive for countries, for governments. So. One second. The last example that I want to talk about, how much time do I have, Dion? 45 minutes. 20, yeah, okay. So I think I'm gonna go fast on this one because I'm presenting this paper at the end of April in a conference here at the bank. But the point that I want to make, we have an ongoing collaboration with the tax administration and the Ministry of Finance in Peru. There was a recent VAT, in 2022, they cut the VAT rate for hotels and restaurants with the goal of stimulating the sector. And we have this collaboration where Peru has very strict data privacy regulations. So the way to work with them was they assign a data scientist, and then we collaborate with them, we send codes, they send output back. And this is a collaboration that it's time consuming, but it's an alternative way in which we can make things work. So in this case in Peru, it seems that the VAT cut is not working as intended. So in particular, there is partial take-up, which is shown in this figure. The tax is decreasing. So this is a chart where it's showing that taxes are decreasing by 50%. There is a drop in revenue from the government. I apologize and I'm going fast here, but I want to cover everything. There doesn't seem to be any effect on employment, so zero effect. And then there is some effect on sales and a decrease in purchases. So the way we interpret this is that this is a sector that is known for a high evasion. And what we argue is that when you lower the output tax, then firms start to accumulate a lot of credit. So if they were engaged in fraudulent activities by purchasing fake invoices and so on, the incentive after this reform is to start doing so. So we are trying to dig into the mechanisms, but this is still preliminary, and I think it's important to get more evidence. So the takeaways, VAT cuts often have effects that policymakers didn't anticipate. There is value of data analytics for tax policy decisions. And there are some contentious areas around permanent VAT changes that I didn't touch, but I think are very important. One of them is whether we should be having, if we want to help the poor people, should we reduce tax rates or more targeted tax rebates like many people are analyzing today. And then the political economy. Sometimes it's not feasible to remove exemptions. It has proven to be very difficult in countries like Bangladesh and Kenya more recently. Moving on to the second part of the talk, personal income tax. It's a tax we aspire to rely on, but often fall short of. This is the most progressive tax that we have, but it's not very redistributive. The reason is that the tax base is porous, in particular because there is informality, and there are preferential treatments such as special deductions or even reduced rates. But typically it reaches the top 5%, even lower than that of the adult population in many low and middle income countries. I want to focus on two key design features. The first one is the exemption floor. So the exemption floor is the floor that if you make more money than that, you become subject to the tax. There is a beautiful paper by Anders Jensen where he shows that as countries develop, the employee share increases, which means that they transition from self-employment to employee employment. And as that happens, the threshold decreases across the income distribution, which means that more people become subject to it. But in practice and in the short run, it has proven very hard, politically challenging and costly to expand the tax base. And I want to argue that by focusing on one example from Argentina. Argentina experienced in the last 22 years, with base expansion via under-indexing. Under-indexing means that nominal incomes increase, but tax thresholds are fixed, and therefore there is bracket creep. So more people, your tax liability increases and more people start paying taxes. This figure here shows the evolution of the share of formal workers that pay the tax. And you can see that there is a lot of variability. The reason for this is that there are different, so there was a period of formalization until 2008, but then there was inflation, which means that more people became subject to the tax. And this has been politically costly for different governments, right wing, left wing, and so on. The government has been adjusting. So, we see that the tax base is expanding, but all of a sudden they have to cut it because it's politically very costly. And it seems to me, at least, that they have overdid it in the last period of time. Again, this is a good tax. We have been discussing, in many countries, they are often discussing like ways to decrease it rather than increase it. But again, it's like a political economy issue that it's very difficult to sort out, and we need data for this. So this is just a screenshot of the metro station in Buenos Aires, where they are saying, damn tax on labor, and there is like a national strike to, kind of decrease it. The second feature that I want to focus on is the scope. There is a long-standing debate on whether income taxes should be comprehensive, meaning they tax all the income sources, or whether we should have like a dual schedular tax system in which you have like progressive rates for labor income and then different flat rates for capital income. There is a debate. What I want to argue here is that regardless of this debate, it's key to have a better diagnostic and better impact measures of what's going on in low and middle income countries. In particular, to shed some evidence on this debate on comprehensive versus dual, it's key to understand that capital and labor income boundaries are often blurry, are unclear. And the second one is that there is there is a paper by Piketty and co-authors that show that the tax differential, so whether you apply a lower tax rate to capital income, that differential declines with the income shifting elasticity. So income shifting elasticity is the ability for, let's say, a capital rentier or a executive of a firm to declare income as labor income or to declare it as dividend. Okay? So it's very important to measure the size of this elasticity. We know zero or very little about this. So for this second point, I want to highlight some great evidence from Honduras. This is work by Thiago Scott, Pierre, who is or was sitting here, and it's a great type of collaboration that they managed to develop with the tax administration in Honduras. What do they do in this work? They assess the effective tax rate of top earners. The effective tax rate is the percentage of the income that they pay in taxes, right? The key of this work is that they have a comprehensive view of all the income sources of Honduras by linking personal income tax records to corporate tax records. And with this analysis, with these tools, what they do is they assign undistributed profits, so retained earnings from a company, they assign that to the shareholders of those companies. What do they find? They find that at least in Honduras, it seems that effective tax rates increase, so the progressivity increases all the way to the top. This is for the richest, so something I want to emphasize is personal income tax in Honduras applies to the top 75,000 people, like top 1.5%. Okay, so it's really targeted at the top. We see that it increases with income. But the key is that when you decompose this into the different sources, we see that it's mostly undistributed profits at the top. So it's the blue shaded area what matters, and it's what dominates at the top, and this is what is working as a backstop for the personal income tax, in the sense, the reason we get progressivity all the way to the top, we have a tax rate of 25% for both personal income tax and corporate income tax. But this is a very, I would say, peculiar situation. In most countries, the personal income tax becomes regressive at the top. So we have this evidence from Argentina. I'm not lucky, like Tatiana, Thiago, and co-authors, to have a collaboration with Argentina, but something that is really fascinating for Argentina is that they publish tax tabulations since 1990 or so, very detailed tax tabulations online. These are public, and this is an intermediate step that I think many countries should be doing. So with these tax tabulations online, what I did was to sort people based on their total income. And here I show that for the richest, so for the top 0.1%, so the richest 4,000 people in Argentina, the tax system becomes regressive at the top, especially for the richest 2,000 people. What's going on? It's that capital income share increases at the top. And capital income is taxed at preferential rates, lower than the regular personal income tax. So what's missing from this evidence is offshore income and wealth, for example, is not here, and consumption through the firm. The second point is very hard to, I think, empirical to address. There's a beautiful paper by Leite where they do this in Portugal with some data from, I think, an app or mobile phones, I don't remember well. The key for offshore and income wealth, key question is how much is out there. I have a paper on this. In Argentina, at least in Argentina, it seems that there is a lot. There was a tax amnesty in 2016 that revealed assets worth 21% of GDP. When they disclose this income, this wealth, when you disclose a stock, you have to start paying taxes on the flow. So that's why there was a large fiscal externality, positive fiscal externality, and the capital income tax base more than doubled. And this was a permanent change, enduring change. So there is a key role for automatic exchange of information and the common reporting standard. And again, I want to emphasize countries, and I know this because I spoke with tax administrations, they are receiving millions of records. They don't know what to do with it, how to clean it, how to harmonize it, and how to link it. So again, I think there is space here for data analytics to help. The last topic that I want to talk about are subnational taxes. These are widespread with accessible data, and yet they are understudied. There is a key question, which is how do local governments finance development and at what economic and political cost? This is a critical question that receives much less attention. But data analytics, again, it's much needed here too, to understand the anatomy of these taxes and what is the impact of different policies that they have implemented over time. I'm going to focus on two taxes, which are the most important at the local level: local business tax and then property tax, if I have time. Otherwise, I will skip it. So local business tax, it's like I would say it's like the comfort food of public finances, because it's like you get a lot of it, but it's unhealthy. So it's a fiscal crutch with economic cost. Why? This is due to lower political cost compared to the property tax, which is typically unpopular and politically costly. It's easier to collect because the revenue is typically concentrated at the very top. And I'm going to show you a figure on this. And then the incidence of the tax, so who is really affected by tax, it's faster compared to the property tax. The property tax, is it a sleeping giant or is it the tax that is doomed to fail? There is increasing consensus that the tax is underutilized, but it's getting a lot of academic attention, and there are many studies on this tax, and I think it's great to have this. So why should we care about subnational taxation? Because there are also interesting macro dynamics in different countries. It's hard to get, surprisingly, good data, macro data on collection levels for different countries. To me, this is surprising because it's surprising also that there are not more academics working on this, because if you think about it, in Argentina and Mexico, there are over 2,000 municipalities. In Brazil, 5,000 municipalities. In Nigeria, 800. In the Philippines, 1,500 municipalities. So the opportunity for PhD students and for academics and so on to shed light on this tax is endless. It's a matter of reaching out and see who is interested in collaborating. Going back to the macro dynamics, this figure is very concerning. So we have here the composition of the tax revenue for the 24 provinces of Argentina. We have the turnover tax, property tax, and other taxes. Turnover tax is a tax, it's like it's VAT but worse. It's like a tax on gross sales. So you cannot deduct anything. So it's perhaps one of the worst taxes that exist in theory. It has advantages and disadvantages, but in principle for efficiency, it's very bad. And we see that over time, at the beginning in 1980, roughly 50%, it was 50% turnover tax and property tax. Today, they essentially depend on turnover taxes. 84% of subnational revenue, own revenue, is coming from this. A similar pattern emerges in municipalities. So the lowest level that we have in Argentina, we see that they also impose their own turnover tax at low rates, but still, they are depending more and more on a tax that, in principle, in an upper middle income country, I think this is a little bit concerning. But again, we need to balance. We need better diagnostic. We need to understand what is the value of raising this extra revenue versus not taxing at all or using a different instrument. So that's why I put in the title, Good Politics, Bad Policy, as a question mark. So what I want to highlight here is some ongoing work that I have with Santiago Garriga and Isidro Guardarucci, where we are using micro tax data from all the provinces of Argentina. And I want to highlight 5 stylized facts. So again, turnover tax is a tax that applies very low rates to gross sales. It's very easy to collect and administer. It provides a stable source of revenue, but the main issue is that it creates like a cascading where you tax the same transaction several times. So this compounds into the price. So it's in theory really bad. So let me show you 5 stylized facts and where are we going, where are we heading with this. The first one is that when you split the sample of firms into different bins, so here the bottom 90% based on their total sales, the next 9%, the next 0.9%, and the largest group of firms, so the top 0.1%, so these are essentially almost 400 firms. So you can see that all the activity, at least in Argentina, is concentrated here. So like 57% is explained by this group. The second fact that I want to show is that these firms have multiple activities. So we have data at the firm level, firm month activity level. So you can see that in red, we have the top 1%. The last triangle is the top 1%. The number of activities that they have is like 9. So they have some services, transportation, and then they sell something and so on. The third stylized fact is that they operate in multiple jurisdictions. So we know where these firms are selling their goods, right? And we see that this increases with firm size. So we have percentiles of annual sales. We see that the largest 400 firms, they operate in about, on average, 20 jurisdictions. There are 24 in Argentina, so they sell almost to entire country. The fourth fact is that there are multiple rates that increase with firm size. So they are relative. So there are multiple rates. So here we see for different sectors: primary sector, manufacturing, retail, financial, and services. At the very top, where that explains most of the macroeconomy, we see that they increase because there are some progressive rates that they have introduced over time. So that explains why the revenue has increased for this particular tool. And the last fact that I want to show is that dispersion, tax rate dispersion, also increases with firm size. And this is concerning because the dispersion of tax rate is one of the sources of misallocation in an economy, right? So here what we are doing in this work is we are applying the framework of Shea-Klenow to measure what is the size of these misallocations and what would happen in a particular country, in this case Argentina, if they eventually remove this dispersion. So if they apply uniform rates somehow. And again, this is a framework that could be used in other settings with similar tax databases and so on. 5 minutes. Last topic that I want to mention is property tax. Property tax, as I mentioned before, is underutilized. It can help raise revenue equitably. Why? Because real estate is a major repository of wealth in many societies. Historically, municipalities have applied flat proportional tax schedules, even like fees, like a fixed fee, an amount of money. The tax base also varies a lot across municipalities. So it's a tax that I think it's archaic in design and governments haven't really thought about improving their design, because it's like they inherited this and then it's very hard to change. And what I think is surprising is that it contrasts sharply with modern tax tools such as personal income tax or wealth taxes that are progressive in nature. So that to me is surprising. So what do we do? In a recent paper, we study a progressive reform in 3 de Febrero. It's a large urban municipality in Buenos Aires, Argentina. It's characterized by low enforcement and low compliance. So here we have a figure of the share of taxpayers. We have it's a tax that they pay monthly. So that's why on the horizontal axis we have the 12 monthly installments. And you can see that roughly like 50% of the people pay the tax, and it's very polarized. So they either pay the 12 installments or they don't pay it. And this is, I think it's a style effect that would be common in many settings. So what do we do in this paper? We study a progressive reform. This is a reform that, for political reasons and for equity concerns, the government decided to provide so the schedules, which is the blue one, was historically regressive at the beginning and then becoming progressive at the top. They decided to give a tax cut for low-value properties. We are going to call these low-value properties poor. And it was based on a threshold based on the valuation of the property. So properties valued at 750,000 pesos. Less than that, they experience a VAT cut, which is the red line. Those in the middle, no changes. And then at the top, there was a VAT, a property tax increase. So with this, what do? We analyze the effect of making the tax progressive on compliance and revenue. And what we do is we focus on the thresholds. The threshold where there is a tax cut for the poor, and then the threshold where there is a tax increase for the rich. We analyze the direct effects on compliance, and then we also have an information experiment where we tell the people what's going on with the other people, and that will become clear now. So what is the causal effect of making a tax progressive? What we find is for poor, so here is a chart where we put the property value on the horizontal axis and the change in tax compliance on the vertical axis. We see that those to the left of the threshold, we call it poor. Those to the right are the middle. We see that tax compliance is increasing for those who received a tax cut. For the rich, we see the opposite, different threshold. Those to the right are the rich. We see that tax compliance decreases. We have some elasticities in the paper, but I want to spend time on that. And then for the cross-rate effects, what do I mean by cross-rate effects? We have an experiment where we tell randomly some groups some poor people, we tell that the rich are now paying more taxes. And then for rich people, we tell, for some of them randomly, we tell them that the poor are paying less taxes. When we do that, we follow, we measure the change in, so for the poor, what we do is we measure the effect of receiving a letter on tax compliance. What we compare is a letter, so it's within the poor group, some are receiving a letter just saying your taxes are lower, and the other group is your taxes are lower and the rich are paying more. When we do that, those that also learn that the tax became more progressive, there is like an extra effect on tax compliance over and above the direct effect that I showed before. And then for the middle and the rich, it's less clear, but we see that there is a little bit of a decrease for the rich. So when the rich learn that the tax became more, that the tax decreased for the poor, there is an extra negative effect on tax compliance for that group. So with this, I'm going to stop. So this food, I believe I provided food for thought based on the several illustrations that I provided today. I want to argue, or what I argue in the talk is that domestic resource mobilization is at the policy data crossroads, and that data analytics can help pave the way for better tax policy and administrations. Modest aside, I believe we are very good at this here at the bank, and please reach out to us at DECARG and DATAX to discuss this more. And the last thing that I want to mention is that what I mentioned in this talk is just really scratching the surface. It's the tip of the iceberg. There is a flagship report we are producing on domestic resource mobilization with Pierre, Mavish, Oyebola, and many collaborators, and Tiago, and so on. And I want you to stay tuned because this is going to come out soon. So thank you so much, and looking forward to the discussion.
Great. So thanks very much for inviting me. This is really a pleasure. I think that we're all super happy to have this kind of evidence provided, as we're all interested in how to leverage some of these powerful digital tools and data to help governments not only administer taxes better and more effectively, but also to see to what extent that that new data and analytics can improve the range of implementable policies in a way that both efficiency and equity are improved. What I'm going to argue is that despite this recent growth in evidence, we are very far away from what we really need. There's a huge agenda, I think, on the horizon on this, and I think I would argue that a lot of the questions that policymakers really want to know have to do with how economic agents will respond to policy changes. So how will consumers respond? How will suppliers respond when it's about VAT? And to some extent, that behavioral response partly depends on how much they know, but it also partly depends on the capacity of government to inform, and also to what extent the government is able to, administer in a way that takes advantage of all the data analytics that exist. So there's, I think, a lot of questions around those behavioral responses on both the supplier and if it's a personal income tax, it'll be also on, or corporate income tax on the economic agents sort of feeling this pain. So the work that Dario just showed us with a kind of an example on Argentina for VAT is really interesting. It's similar to what other places have found, but more importantly, what is interesting is the unintended consequences, right? So in the case of Argentina and Mexico, there was very little reduction in prices, no reduction in prices in the case of Peru. So a lot of the reduction in VAT was pocketed by the suppliers. There is some evidence that, in fact, inequality increased as opposed to declining, which was part of the intent of the policy. And this, again, has to do with the behavior of firms, profiteering, particularly where low-income households shop. There's no discernible income on sales or employment in the case of Peru, and there's some evidence of reducing compliance in the case of, again, of Peru. So my question with this, and particularly in the context of very tight budgets in most of our developing countries, is could we expect the opposite if increases in VAT were on the table? And I don't think that that's necessarily the case. And so this kind of asymmetry of VAT going up or down is really a testable question. There's some really nice evidence from Mexico from the 2014 reform, which had an increase in VAT, where Pierre Bachas found that the pass-through is in formal firms is actually about 77%. Obviously, no pass-through in more informal settings. But this is sort of one country, one data point. Not clear if this is the case for lower and low middle income countries. It's also unclear that what it means for revenue and equity and efficiency, particularly when taking into account the fact that firms or consumers can switch very easily from shopping in a modern formal store to an informal store. That elasticity of moving your choice of where you shop is especially important in very low-income settings where informality is the norm. It's not uncommon to see high-income people buying food in, let's say, street markets and things in places like that in developing countries. So that elasticity is important to figure out. Second, to what extent would VAT-CIT integration help? Some tax administration offices are now able to link up sort of VAT receipts with their corporate income tax receipts, and they may have an incentive to become more formal. So the question is how much of the reduction in compliance in sort of traditional stores that are formal but potentially have a large informal sort of impetus. I always think about in my own country, in Bolivia, you go to a formal store, you'll get asked, do you want a receipt or no? And that determines the price, right? And you can negotiate how much of the VAT savings goes to the supplier and how much goes to the consumer who doesn't pay it. So that kind of negotiation is also interesting. And then another question is what can we expect from eliminating VAT exemptions? So most countries are not necessarily considering increasing VAT, but rather getting rid of exemptions. This figure comes from some work done across multiple countries around the world using our fiscal microsimulation modeling, which essentially shows that VAT exemptions are largely going to the top of the distribution, mostly because, of course, the rich consume more. So it's not surprising that those benefits go to the top more than the bottom. But in addition to that simple fact, there is also some evidence that larger firms are much more likely to claim VAT exemptions or reduced rates than say, smaller or more informal firms, not informal, but smaller stores, which is where a lot of the poorer population potentially is consuming. So there's good reason to believe that eliminating these VAT exemptions will improve efficiency, it'll raise revenue, et cetera. It's very politically difficult to do, as Dario was mentioning it, but one could do some simulations. We did some simulations showing that, if you eliminate these exemptions and then you give households, safety nets or some other form of mitigating mechanism, you'd be better off. You'd reduce inequality, you'd reduce poverty, et cetera. We often do these things to justify some of the policies, but actually impacts are uncertain because we don't know how these kinds of reforms will affect compliance. They're hard to estimate. Will suppliers become more, be willing to do, capture some of that additional revenue? To what extent will consumers decide, if you eliminate exemptions, will they decide to go to the informal markets instead? How much can you really expect in terms of revenue collections? How much can you really expect from those changes? And then it's unclear how the enforcement will actually affect equity and efficiency. Because enforcement on its own, even if you did no change in tax policy, also has a distributional impact. And that, again, is unclear. We don't know. So many questions there. On PIT, Dario showed a very nice example from Honduras. I think there are several examples around in the literature that really focus on the fact that high-income earners can play around and either with their undistributed profits or the capital income or wealth, so that they can sort of declare it in whatever is most convenient to them. So lots of tax avoidance happening at the top. And I guess a big question for all of us is to what extent do international information sharing and coordination policies help, particularly in low-income countries that have limited capacities. What is the best way? What is the lowest hanging fruit when you're dealing with a low-capacity country to actually make use of some of these, innovations in international coordination? And then finally, with respect to the work that he presented on turnover taxes, even though he was presenting mostly for subnational, I would argue that in a lot of countries, 2/3 of countries in Africa have some form of simplified tax regime for SMEs. These are turnover taxes for small, medium enterprises. And here, there are a lot of questions that would, that have to do more with how these turnover taxes are actually implemented and the potential efficiency and equity considerations that come out of it. So, for instance, a lot of these turnover taxes don't have a tax-free threshold. So you have even very subsistence level firms being liable for these turnover taxes, even though they're, they really should be exempt. And in countries where that do have a little bit of progressivity, at the end of the day, the effective rates are not progressive, partly because the lowest income people don't necessarily have the information about what the tax policy really is and how to benefit from that, that progressivity. And then finally, on the property taxes, I think it's really interesting that you're showing the differences in compliance between poor and non-poor. And I think more generally, there's a lot of room here to do kind of a combination of information between what's available from administrative sources, but also surveys on how people are perceiving changes in policy, and therefore how their willingness to pay taxes changes over time. With that, let me end. Thank you.
Thanks, Gabriela, and thanks, Dario, for the presentation. Let's open it up for Q&A. Again, if you have a question online, please raise your hand and I can call on you. If you're in the room, please, could you go to the mic? Just, you want to line up behind the microphone?
Hi, very nice presentation. Dario, I have a question for you. So if I understood correctly, there's a lot of evidence within Argentina and across countries that this pass-through of the VAT can be almost full, can be 50%. So do we know what drives these differences? And connected to what the discussion, it was being discussed, the role of information, no? So is it like in big retailers, it's easier to, like accompany these policies with information campaigns of, okay, we're removing this tax, so you should expect this pass-through or this cut in this %, or informational campaigns of incentivizing shopping around, you should be expecting this to, cost this much, so look out for, So what do we know about how to, implement these policies along with other campaigns?
So let's take a couple.
Hey, Dario, indeed, great presentation. I definitely learned a lot. I was wondering, in terms of like taxes, I mean, there's also some taxes that try to overcome some inherent market failures that are there, thinking of, VAT taxes on products with high sugar content or carbon taxation or congestion taxes. So given, that they try to, overcome some market failures, is there some work, or should we try to focus more on taxes that are less distorting by itself and maybe go more towards an efficient market equilibrium? Thanks.
Well, again, thank you again for a very interesting, it's really a nice summary of all this work that you and the colleagues have done. I just have a comment regarding the subnational, exactly, property taxes. And you mentioned how you are surprised why not as many, because data is there. Fortunately, I have to disagree. Data is really not there. I mean, not enough of it. In most countries, unfortunately, it's very difficult to get micro-level data on property taxation because there is no consolidated database where you can get it, or then you have to travel around the country, search by municipality, unless you focus on one. But the reason why is it's important to actually have a country level kind of scope of data for property tax is that it's not really only, we claim that it's actually equitable tax, but like all these over the last decades, studies have shown that it's regressive. And there are different reasons why that is. One of them is that theoretically it's a progressive tax. Of course, it depends on how you see it. Is it an excise? Is it it's a tax on income? But also, depending on the structure, you may end up with actually a regressive tax. And you showed the example of Argentina, where they had a tax break on the lower value properties. And I would be very curious to see if you could do the similar study in about 5 to maybe 10 years and see what happens. Because what theory suggests is that such a policy is going to allocate income toward the lower income housing, where you're going to have now higher income individuals owning lower income housing, where it's going to increase their value, and lower income individuals are not going to be able anymore to afford actually lower income housing. So this is the limitation besides of other issues that the policy design actually can change. So for property tax, it's really important what is only progressivity in the medium and long term. And another thing is for property taxes, if no other taxes, implementation is here crucial, because in addition to just tax design, you're going to have what is going to impact progressivity is also simply administration. Like you're going to have tax assessment in some countries, property value assessment is going to be more favorable for high income housing. In fact, there's a study from Italy I can share with you that shows that high income actually properties are under assessed relative to lower income. So all these different, certainly it's very useful, but just ideas. If you have a chance to do it, it would be great to have such evidence. Thank you.
Great. Let's take one more question, and then I'll give it back to you.
Thanks. Great presentation, Dario. I was wondering about how to think about the political economy which came out throughout your presentation. It seemed like there was some lack of clarity, not in your presentation, but in the political economy literature, there's no clear explanation for how to think about even sort of tax revolts or recent movements we've seen in Africa. For example, in Kenya, when a tax reform was announced, people were on the streets. Were they on the streets because it's populist, they don't understand that taxes are important? Or is it that something else? Is it lack of trust that the government will use the taxes well? So with that sort of general background, I wanted to ask you two specific questions. One, what is the role of the data revolution in addressing some of these political economy constraints? So for example, when you present the evidence on the lack of pass-through of a reduction in the VAT, does that change? Is it surprising to the tax administrators? And does it lead them to think about changing the policy or communicating to, if the demand was a populist demand from poor, lower income people, does that help them communicate that, look, we tried using this and now we understand from all this nice big data that it didn't work as intended? And second, on the other side of the politics of elite capture, maybe this is really a naive, idealistic question, but is there any talk about moving towards something that's more like a lump sum tax? I mean, some of the top brackets you're presenting data on are as few as 500 firms or, 80,000 people. And some of the really high brackets are the ones who are offshoring. Presumably, we kind of know who are these big entities. Has there been any discussion of, just more lump sum taxation per head? And what is the political economy of elite capture on the top? Like, presumably there's a lot of resistance to that kind of a movement. Anything written on that? Thanks so much.
Thanks. A lot of wide-ranging questions. Go ahead, Dario.
I'm going to start. Hi. Yeah. I will start from the end all the way. I think it's easier. Studia, I think Mavish, who is sitting behind you, would be better equipped to. But I think those are very, very good points. I think, you know, what I know is the lump sum tax, like a poll tax that Margaret Thatcher implemented in the UK. It was complicated, so I think a lump sum tax. I wouldn't see a space for such a policy. On the VAT cuts communication, I think it's key. I think there is a disconnect between research and policy action. And there should be more communication in the sense like policymakers should try to communicate better, like the figures that Gabriela was showing with the incidence of eliminating tax expenditure. That's key to communicate a policy reform. I don't really know how to do it. Argentina has done it successfully in some cases, like the tax amnesty. They were great communicating that, like to entice participation. I feel like that was one of the typical, a good example of what countries could do. That's something I discuss in the paper, like this part of the political economy. But I'm not an expert on that topic. I think it's very relevant, but I wouldn't do enough justice to that. Violeta, thank you for your comment. That's great. I think I disagree on the part that there is a lot of data, but it requires a lot of entrepreneurship, right? And let me give you an example of Juan Luis Schiavoni, who worked with us. He used to work at in a municipality in Argentina that they didn't have any data analytics. There was, a computer. Data was sitting there, so he took the computer, but they needed capacity. He arranged all the files, monthly files together, and they built the data, and now they are using it. So I feel like every municipality has this type of data. It's just a matter of going, knocking the door, trying to be proactive, and try to make progress. That's what I would like to do. And if I agree with you that these taxes sometimes are regressive, we don't really know. We need, if we had data from 5 municipalities from Brazil, Colombia, Argentina, we put them together, we can get like an overview of what's going on in Latin America. And I think that's feasible. On the market failures, and I think it's a very good point. I think the talk was more focused on. I agree that externalities can be justified. Lower rates on goods that create externalities, either positive or negative, or higher rates on those with negative externalities. Those are valid points, and I didn't focus too much in the talk on that. Claudia, on the marketing in large stores, that's very interesting. The way I think about this is Walmart is a company that they comply with taxes. So when you go to a supermarket, you always get a ticket. So these type of places, they typically use, or at least in Argentina, they use it. They use these policies as a marketing device. So they all of a sudden they put no VAT because there is like an extra effect on demand. So if you don't put the sign, demand would be lower. In other words, and I think supermarkets are fully aware of that. It's different in independent grocery stores where tax evasion might be 50%. And it's like Gabriela was saying, you go there and you invite the owner to evade. You say, is it the same price if I pay in cash? You are saying, can we share the incidence of the tax, of the evaded tax? And I think that there it's a little bit different, the marketing. So I don't know how much they want to communicate this to consumers, because to begin with, they are not paying, or they are evading 50% of the tax. This could be one of the reasons that explains partial pass-through, but there are different explanations. One of them is imperfect competition. And I believe that the mechanisms, we don't understand them very well. And there is space to do more research on this. And then going to Gabriela, thank you very much for taking the time to to read the papers and think about these problems. I think it's very interesting, your observation on the inequality. I don't think we talk much about that in the paper in Argentina. I also think it's very important to measure the elasticity of switching across stores. We don't have any evidence of that. It's hard to get, but it's an important topic that people should be thinking more carefully about. eliminating VAT exemptions, yeah, totally. That's so important. And it seems that there is some professional consensus that many countries, that's one of kind of a low-hanging fruit, politically very costly, but to improve a second-best tax, such as the VAT, and it has proven politically very costly. Like Bangladesh, January 9, they increased they homogenized the tax rates on 100 items. 10 days later, they retracted the decision because there were starting to be protests. So I think that part is, I think it's very exciting. It's something that maybe communication can help, like this type of figures that you show, but another way to, or compensate with an additional, an alternative supplementary program. Yeah, so yeah, that's one reflection. And then for the turnover tax, yeah, I think it's more prevalent than we think. So local business taxes are prevalent in developed, even in the US, there are like 7 states that they have a gross receipts tax. So that's the turnover tax of the US. Tax rates are very low, but it's very silent, and we don't have enough evidence on this. And yeah, I would like to see more, if possible. So yes, with this, I think I'm gonna stop.
Great, thank you. We have time for maybe 1 or 2 questions, very, very brief ones.
Nice presentation, Dario. A couple of questions on the local taxes. You show the distribution of different sources of the taxation at the local level, but a big chunk of their tax revenue comes from transfer from the federal government that they go and you don't display it. So I don't know how much of the tax revenue you're capturing with those graphs. And the other point is, you mentioned this thing about mobile money and the taxation of mobile money. I was wondering, when people pay with mobile devices, are they evading, for example, some of the taxes, the VAT tax, for example? And if they can evade, can you get to this point that Gabriela was mentioning, whether you can switch across stores using the mobile payments?
On the mobile money, if there is a VAT or like for instance Uganda or Tanzania, I don't remember, I think it's Uganda, they have excise tax, they have the VAT, and then there is like a fee, so 3 taxes. They do pay those taxes. The one that I think is more relevant in terms of revenue is the fee that they pay, but otherwise there would be some in some cases there will be some taxes. Sometimes these services, these transactions are not taxed, and I think those are part of the OECD Pillar 1, if I remember correctly. And then on the local government, it's true that from the figures, I'm omitting grants and transfers that come from the central government. For provinces, at least in Argentina, that's a big chunk. So own revenues could be, but still, subnational taxes can represent of the total, adding subnational and national taxes. Subnational taxes are 20% of all the resources that Argentina gets. So it's a significant amount of the GDP, and it has remained constant over time. So it's not that what is changing is the composition of subnational taxes, but then the share that they collect, the own revenue, is relatively constant over time. So it's really the composition, the way they are taxing the different tax bases. And for municipalities, it's even more important. Like municipalities, 40% of the revenue that they get is own revenue, on average. 40% is what they get, and the rest is what the national government transfer to them. So it's even more important for cities. So I think that's why, even from a macro perspective, it's really important to understand the consequences.
Okay, we have 1 question online from Alistair. Do you want to unmute yourself and ask your question? But please make it brief, because we are running out of time. Alistair?
Hi, can you hear me?
Yes.
Fantastic. Thanks. Excellent presentation, Dario. There was a bit of discussion here about the political economy of the VAT and base broadening VAT reform and getting rid of the obviously very, very badly targeted reduced rates. One issue that's got quite a bit of attention recently, so for example, has been implemented in Uzbekistan, in one of the regions in Brazil, are these real-time VAT cashback regimes. So I'd be interested in your perspective, and Gabriella's also, on the feasibility of these schemes in low-income countries and middle-income countries, particularly where the countries that you would expect to have the technological capacity to implement these schemes would likely also be countries that are able to effectively implement a traditional targeted cash transfer. So appreciate your views on that. Thank you.
And we have one more hand up, so I'll just turn it over to Thomas. Can you unmute yourself? Go ahead. We can't hear you. Sorry. Okay, so I'll turn it back to Dario and Gabriella if you have anything to add.
Thank you. Yeah, thank you, Alastair. I think it's, in some countries it's true that like Brazil, Rio Grande do Sul, and then in Pakistan, they have the technical ability to have like a VAT cashback program where they do rebates instead of having reduced rates. I think it's feasible, but I also think it's we shouldn't expect it to be magic. The devil is in the details, and I think these programs, cashback programs, they should be designed very carefully if they really want to reach the target population. But it's true. I left in the slides that will be posted online. I put one in the appendix where I illustrate the example of Argentina with a card called Tarjeta Alimentar, which is for the cash transfer recipients. If they pay, they receive the cash transfer in a debit card. If they use that debit card in any like supermarket, then there is like a cashback that they get automatically, right? So it's targeted to people that receive a cash cash transfer, and then it's you are really reaching the people that need it most, and it's kind of automatic. So we have the systems to implement that. So those are interesting policies, and I hope to see much more evidence in the coming years.
I would second that. I think that this is one way to get around the political economy difficulty of eliminating tax exemptions, and to the extent that if you are a low-income person and you are a beneficiary of the tax transfer system, the cash transfer system, so you receive social assistance, there's a means test somewhere that says that you deserved a break. Instead of having to wait for, paying the VAT and then getting cash through an alternative program, you immediately get that tax relief, in a targeted fashion. So it sort of ticks all the boxes in terms of efficiency. It also gets to the political economy question very quickly. The issue, of course, is, does the tax administration have the capacity to merge essentially the tax administration and the social assistance administration databases in order to make that happen? And here I would say it's only going to be the middle-income countries that have sophisticated tax authorities, sophisticated social assistance registries, and so on. And also the other I guess danger here is that a lot of the social assistance registries, even in upper middle income countries, are not going to fully target everyone who's at the bottom of the distribution, right? So there are lots of leakages and sort of people who should potentially be getting that relief that aren't going to be getting relief just because of the eligibility criteria for that social assistance. So there's that danger that if you have those holes that you're not going to be getting at those populations. But I think there's a huge promise here. I think the Brazilian example is beautiful, and hopefully more countries can do more of this. Thank you.
Great, thank you very much. Thank you everyone for joining. Just a reminder, the event recording will be posted online, as well as the slides in it, if you wanted to follow up. For those of you who are on the World Bank's intranet, you can listen to the AI-generated podcast of Dario's paper on VAT tax cuts in Argentina on the DEC Decoded podcast series. With that, thank you, Dario. Thank you, Gabriela, for that really insightful presentation and discussion. And thank you all. See you.
Çok uzun. Aynı anda.